Elon Musk has been at the center of attention, and Tesla investors are not happy about it. He had his hands full with Tesla, SpaceX, Neuralink, and X, and now he's the head of DOGE too. Tesla stock has been getting absolutely hammered. It's down about 50% from its December peaks. EVs from China are selling like hotcakes, and some Americans are even boycotting Elon Musk himself. Tesla has historically traded at extremely high multiples. For some investors, it has the reputation of being a company that will change the world. But the market is starting to question that narrative. For Tesla to get back to its all-time highs, it has to prove that it can deliver on big promises. The launch of the Tesla Robo Taxi service is a make or break moment for Elon Musk. And because of this, I believe that Uber Technologies is one of the best opportunities on the market today. Americans drive about 3 trillion miles a year, and it costs about $1 to $2 a mile to own a car. If robo-taxis beat that price, it would fundamentally change personal transportation. Autonomous taxis are expected to become a $1 trillion market opportunity. Back in October, Tesla made a big bet on self-driving AI. Elon announced that the Tesla Robotaxi service would be launched in June of this year in Austin, Texas. He also announced that Tesla intends to produce the Cyber Cab by 2026. This would be a self-driving car that you'd own and be able to rent out as a taxi. This all sounds amazing. These inventions could truly change the world. But how far away are we from this actually becoming reality? For widespread adoption of AVs to happen, there are major hurdles that we have to overcome.
To be able to deliver autonomous at scale. For perspective, we're doing 33 million trips a day. And a bunch of stuff has to come together. First, the regulatory environment has to get there, right? And it's national regulation, state regulation, city regulation. Second, what you need is a superhuman safety record. Like, the opportunity that you have with these robot drivers isn't just to be better than humans. They could be multiple times better than humans. And third, you need to mass produce these cars affordably. You need hundreds of thousands of cars, but these vehicle platforms takes years to develop. Once you have the vehicles, you need to operate them on the ground. You need to operate them at high utilization, both during peak times and during troughs as well.
Right. These obstacles stand in the way of any full-scale robotaxi service. That includes Tesla, Waymo, Zoox, and any other players in the AV race. But these hurdles are a lot bigger than the market might think. So let's go ahead and unpack them one by one. In the US, each state and often each city sets its own rules for AVs. Right now, local DMVs are requiring robotaxis to demonstrate safety in geofenced areas. This is why Waymo operates in San Francisco, Phoenix, and LA only within limited areas of each city. And this is why Tesla is launching its service only in Austin. AVs have to meet safety regulations state by state, one state at a time. There will be different requirements for insurance, different requirements for privacy, different requirements for safety, and so on. Even though there are pilot programs in some big cities, a national rollout of robotaxis could take up to a decade. It's going to take years for regulators, manufacturers, and the government to create a universal framework. I think it would take at least half a decade for Tesla to operate in every state. And don't forget, during that time, there will be other AV competitors too. So in the robo-taxi future, you'll want to be able to travel across states. But the government is not going to let that happen unless self-driving has flawlessly demonstrated 10x superhuman safety. AVs have to be proven over billions of miles before they're allowed to drive with the public. That's why there's an arms race to create the best and safest self-driving AI. Tesla is building a vision-based AI that works with its sensors, while Waymo, Cruise, and Zoox are using LiDAR and cameras together. Each player is using their own proprietary machine learning to create their own AI. Robotaxis are the future, but self-driving software is still a long ways away from being considered superhuman. And even then, AVs will have to prove it works over billions and billions of real road miles. It's going to take years for the government to say AVs are safe enough for public roads. And even after superhuman safety is achieved, producing a large-scale fleet of robotaxis affordably is going to be a huge challenge. Right now, each Waymo vehicle costs over $200,000. In 2024, Uber completed 33 million rides per day. You would need 500,000 full-time robotaxis to service that demand. It's going to take vehicle manufacturers at least a few years to create AV platforms that can scale. Obviously, robotaxis will eventually become cost-effective, but when a geofence Waymo costs over $200,000 while a used Prius costs $4,000, you can clearly see the benefit of using humans and robots together while AVs become more affordable. And don't forget, robotaxis will need services on the ground. Those 500,000 AVs will need to be charged multiple times a day. They'll need parking spots during low demand, and they'll need constant cleaning. Robots work 24/7, so they'll rack up mileage 10 times faster. They'll need weekly maintenance in a garage. Tesla or any other provider is going to have to build out all this infrastructure nationwide. And even if a provider gets over all these hurdles, they've still got a big problem, and that's demand generation. For scale, Uber has 170 million active users. It does 33 million rides every single day. Every robo-taxi player will have to build their very own app. They'll need routing algorithms, they'll need customer support for trip disputes, they'll need payment processing, etc. Then on top of that, they'll have to spend tens of millions of dollars on advertising just to get consumers to try their service. And since consumer app usage is so sticky, it would probably take over 10 years to build a user base half the size of Uber's. And then on top of that, every single city will need a different number of robo-taxis. Each fleet would need to be perfectly sized for each city's rush hour, while also not wasting money during the low hours. Wait times will need to be short, and the trip has to be flawless. This massive obstacle and the other 4 massive obstacles can be instantly fixed by partnering with someone who's already solved all these problems. And that partner is Uber Technologies. For just a 20% cut of the ride, Uber will plug your robotaxi into the world's largest ride matching network. And with almost 2 decades of operations in every major city in the world, you'd have all the customer support, regulatory support, and insurance you'd ever need for your robotaxis. Your taxis won't be burning cash with 170 million active riders. You also wouldn't need to spend 10 years marketing an app, and you won't need to build charging bays and parking lots across the country. Uber has had that covered for years. A standalone robotaxi provider would have to completely replicate Uber's capabilities while also developing AI and producing cars. Trying to match Uber's service versus partnering is economically irrational. Partnering with Uber gives the AV players the flexibility to focus on software and manufacturing. As the leading mobility and delivery marketplace globally, Uber will benefit big from the robotaxis of tomorrow while absolutely printing cash today. Revenue has grown 17% year over year, and it's expected to continue in the double digits. Expenses are staying flat while bookings are growing year over year. In 2024, Uber did $7 billion in free cash flow while the numbers of trips increased by 20%. But when you own Uber, you're getting much more than a ride-sharing app. About 50% of its revenue came from food delivery. Customers expect door-to-door service up elevators and stairs. AVs aren't going to disrupt this segment anytime soon. Half of Uber's mobility revenue was from international bookings. These markets can't and won't support AVs in the next decade. Uber has started selling ads on its platform of 170 million eyeballs. Travel bookings are coming in the near future. QR payments are on the menu too. Uber now trades around $72, and I believe that it's both undervalued and a huge opportunity. Today, it's trading at a 15 PE ratio. It's trading as though it's a below average company. But in reality, Uber is a profitable free cash flow machine doing double-digit growth. It's a high growth company right now and won't be affected by AVs in the medium term. It's in a leading position to significantly capture the robotaxi market. They're expected to grow free cash flow by 23% this year. That's another $8.5 billion they could deploy to their share buyback program. So the way I see Uber Technologies is very simple. In the short term, it's a high growth stock that's being undervalued because of overblown AV fears. And in the long term, it has a real chance at becoming an explosive robotaxi monopoly. I think Uber is worth at least $90 today, and I'm buying the stock now. And in a recession, consumers are not going to risk it with a robotaxi. Consumers are going to stick to what they know, especially on a budget. If you like this content, please consider subscribing. Thank you for watching, and I'll see you next time.